will cover this 5 content. Number 1, I will have a brief about introduction and the advantage of having a control account to maintain a control account. So number 2, what is a sales ledger control account and how they record in their books, and what is the purchases ledger control account as well as how they record in the books, and what if there is a balancing on both sides in their control account. What does that mean? And in what situation we call it contra entry in a control account. So all this I will cover in the whole chapter. So what is the control account? Control account, also known as a total account, which is record the total creditors information and also record the total credit purchases information and compare with my all the totals of sales ledger account. Okay, so sales ledger account is the total TR lah. And all right, so now, so control account have divided into 2, which are sales ledger control account. I always call it SLC as a short form, and another one is purchases ledger control account. I call it PLC. So sales ledger control account is the account summarize of all of my trade receivable, summarize, such as if there is a sales return, then I will minus, is similar, almost the same as my trade receivable account entry, but just that I put a totals of instead of every single TR. Okay, so same goes to my purchases ledger control account. It's an account summarize all of the trade payables account, which are all the purchases on credit, all the details such as the return, such as the discount received, and such as the payment from my TP, or any refunds if they overpay. So all this will appear in your PLC. Okay, this account act as a check on the individual account, as I say in my previous slide. So basically the SLC and PLC are represent as the checking purpose, as like something antivirus checking. I want to see any errors happen or not. So like trial balance, as I said, trial balance are similar. So however, this account can only check the arithmetical accuracy. So errors such as the omission, commission will not be revealed by a control account. Omission, commission, I already mentioned in the chapter 10. So just a quick review. Omission is like I totally not record this particular transaction into my any account. So since there's not it's like ignore, I never record before, how am I going to detect whether it's one side problem or two side problem? Commission, they are same categories of account but different names, right? So it means that same go to the TR, but I put it into the other TR's account. So this one also I can't detect the error because the control account is record the totals of the trade receivable, the totals of the trade. Okay, where a full set accounting records is maintained, it is usual to prepare a sales ledger control account and the purchases ledger control account. So if your company's all the while is maintaining your full set accounting, full account, so like no missing, no nothing, so usually they will prepare the SLC and PLC for the double checking. Advantages. What are the advantages of having or preparing the control account, the SLC and PLC? So first, they can help to find out the errors, to locating the error when the trial balance fails to balance. Let's say your trial balance failed to balance, then you can check back your SLC. Is that the trade receivable problem or is that the TP problems? And secondly, they are proof of arithmetically accuracy. Only the numberings I can check, I can find out, I can detect of the ledger they control. So the balances on this account are regarded as being equal to the totals of the trade receivable and the total of the trade payables. So the balance in the control account will be same as your TR totals and also your TP totals. So this information is available immediately. I can check whether all correct or not. So draft financial statement can be prepared quickly because of the balances provided by the control account. Since I have the control account to make sure there is numbering accuracy, numbering all correct, so I can draft a financial statement right now. So as you know, I always mention, why do we need to prepare the financial statement? Because there is a deadline to submit tax, there is a accounting financials end date to complete all this. I must on time, prepare on time. So they help to reduce the fraud because you can locate the errors already, then you can amend immediately or quickly to reduce any further errors happens, as the control account are prepared by someone who has not totally not involved and making in the ledger. Okay, what is the meaning here? So like example, control account is from A person and the T account, general accounts are prepared by B person. So there are no bias happens. They will cross checks to each other. So they provide a summary of transaction affecting the TR and the TPs for each financial year. So control account also act as a summary of the total TR, the transaction happened in the TR, any returns, sales return,